The live price for NUBURU Inc., trading under the ticker symbol BURU on the NYSE American, is currently $0.2167 per share, reflecting a sharp intraday decline of 4.03% as of 4 p.m. EDT on May 13, 2026. While the broader market might look at a sub-dollar penny stock and see nothing but decay, the reality on the ground is far more nuanced. While most retail traders on the Robinhood app are likely staring at the 95% drop from its 52-week high of $4.24, they are missing a massive structural shift in how institutional capital is beginning to treat high-power blue laser technology. The expectation is that NUBURU is just another struggling small-cap tech play, but the reality is that their recent move into the defense sector and non-kinetic software solutions has put them in a position where they are no longer just a hardware manufacturer. They are becoming a strategic asset in modern resilience infrastructure, a pivot that most casual observers on investing sites haven't even begun to price in yet. When you look at NUBURU stock today, the immediate reaction for many using interactive brokers or checking their Fidelity mobile app is one of caution due to the sheer volatility. We saw the stock touch a low of 0.15 cents back in March, and the recovery to the current 21-cent range has been anything but smooth. However, the trading volume we've seen recently suggests that this isn't just retail churn. Institutional activity is often masked in these smaller names, but the consistency of the support levels around the 20-cent mark indicates a floor that is being defended. If you are someone who manages a self-investing portfolio, you know that the gap between what a company is worth on paper and what the market thinks it's worth is where the real opportunities sit. Most people see a company with a net income deficit and run for the hills. But if you look closer at their recent quarterly profit and loss statements, specifically the September 2025 data, you see a massive spike in financing cash flow. This tells us they have the runway to execute their next phase, even if the current EBITDA looks like a sea of red. The common belief among those looking for investment help is that you should stick to the giants like Apple stock or Nvidia stock because they are safe bets. And while those are staples in many Schwab Intelligent portfolios, the narrative for a stock like BURU is built on a different kind of tension. It's the tension between the slow, legacy welding technologies and the high-speed, high-efficiency blue laser disruption that NUBURU is spearheading. The market expects these small players to be swallowed up or fade away, but NUBURU has been aggressively integrating their technology into military and government sectors. This move into defense is a total departure from their old business model of just selling industrial lasers. It's about mission-critical infrastructure now. When a company shifts from being a tool provider to a security provider, the valuation metrics have to change. This is the part of the analysis that forces you to rethink the penny stock label. Recent market movement shows that BURU is highly sensitive to sector momentum in the energy and transportation fields. We've seen daily swings of 5 to 10% become the norm, often triggered by even the smallest mentions of new contracts or pilot programs. For those using the Fidelity trading platform, the technical indicators are screaming oversold, yet the stock remains pinned under significant macroeconomic pressure. High interest rates have historically punished small-cap companies that rely on debt or equity raises to fund R&D. But NUBURU is fighting back with a business model that focuses on dual-use solutions, technologies that work for both civilian manufacturing and defense military. This diversification is their shield against a recession. While your average intelligent portfolio might ignore a stock with this much variance, the concentrated bets being made by specialized ETFs and mutual funds suggest that the reality of NUBURU's value is being built in the shadows. What exactly does this company do? At its core, NUBURU is the leader in blue laser technology. Unlike traditional infrared lasers, blue light is absorbed much more efficiently by metals like copper and aluminum. This means they can weld faster and with much higher quality than anything else on the market. This is critical for the electric vehicle industry, where battery production requires massive amounts of precision copper welding. If you look at the growth of EV infrastructure, NUBURU is the silent engine behind the scenes. They were founded in 2015 and are headquartered in Denver, and while they faced significant headwinds in scaling, their intellectual property portfolio remains one of the strongest in the space. They aren't just selling a product, they are selling a patent-protected method of manufacturing that the rest of the world is eventually going to have to adopt if they want to remain competitive in electronics and green energy. Now, let's talk about the future outlook, because this is where the expectation versus reality gap becomes a chasm. The market expects NUBURU to keep diluting and struggling with cash flow. However, the potential catalysts in the second half of 2026 are looking increasingly weighted toward the upside. We are seeing a push for domestic manufacturing in the US that favors companies with proprietary, high-efficiency tech. If NUBURU can secure just one major Tier 1 automotive or defense contract, the current valuation of 0.21 will look like a historical anomaly. The risk, of course, is that they run out of breath before the finish line. Every investor should be watching the change in cash line on their next report.
In late 2025, they saw a massive jump in cash reserves due to strategic financing. If they can maintain that cushion while narrowing their operating losses, the transition from a speculative play to a fundamental growth story will be complete. Comment below how many shares of NUBURU you currently hold, and whether you think the shift into defense contracts is enough to save the stock this year. I want to hear your take on whether this is a buy and forget or they trade only situation. Institutional interest is the real wildcard here. When you check your individual brokerage accounts or scan through the latest SEC filings, keep an eye on the financing cash flow and investing cash flow sections. In 2025, we saw NUBURU put almost $16 million in investing activities, which is a massive number for a company of this size. That isn't money being wasted, it's money being planted like seeds. The expectation is that this spending will lead to more debt, but the reality is that it's being used to build the defense and security platform that will likely be their main revenue driver by 2027. This is the kind of insight that isn't reflected in a simple price chart. You have to look at the movement of money within the company to understand the motion of the stock. As we wrap this up, the central takeaway for BURU is that the market is pricing it for failure while the company is positioning itself for a strategic pivot. The contrast between the 0.21 price tag and the advanced blue laser technology they hold is one of the most extreme examples of market disconnect we've seen this quarter. Whether you're using SoFi Invest to pick up small lots or managing a heavy position via interactive brokers, the strategy remains the same. Monitor the execution of their government contracts. The narrative of struggling tech is the expectation, but the defense infrastructure play is the reality. If you can balance those two perspectives, you'll have a much better handle on where this stock is headed next. The volatility is real, but so is the potential if the reality of their tech finally catches up to the market's expectation of their survival. Comparing this to the safety of something like a Fidelity IRA or a long-term hold in Tesla stock might seem like apples and oranges, but it's all part of the same ecosystem. Smart investing is about understanding where the risk is mispriced. Right now, the market is treating NUBURU like it's already gone, but the cash flow data and the patent library tell a much more resilient story. We've seen this play out with other small-cap tech names before. The long, painful slide followed by a sudden, violent re-rating once a major partner is announced. Whether NUBURU has that moment in 2026 remains to be seen, but the groundwork is being laid in the intraday movements and the institutional quietness we are seeing today. Keep your eyes on the volume, keep your eyes on the defense news, and always remember that the ticker price is just the market's current opinion, not the company's final value. Authority in this market comes from knowing the difference between the noise of a 4% drop and the signal of a multi-year technological shift. That is where the real analysis lives.